To you. Thank you.
Sure. So pension-backed home loans is, in summary, it's a form of security that is provided to a creditor, such as a bank, for example. And from experience, I've seen that Standard Bank is quite big on pension-backed home loans. So what happens in these particular circumstances is, instead of there being a mortgage registered over the property, or in addition to there being a mortgage registered over the property, a person puts up their pension fund as security towards this credit provider, as an example. So what this effectively means, so think about what a mortgage is. A mortgage is a form of security to say that if anything goes wrong and you don't pay your loan back, that property can be sold to satisfy the loan. So it's something very similar to that, because now what the credit provider is looking at is your mortgage, is your pension fund. And if the loan is not repaid, they can look at your pension fund in order to reclaim the loan amount. So this is the fundamentals behind pension-backed loans. Now, what you had asked, and I'll be saying, is what are the pros, what are the cons? So it's a very, very long conversation. And like you mentioned, this is more an experience share, because I'm not a mortgage bond originator or a bond originator or necessarily a finance originator. So things like this develop as the creditors see use for them, and they do change. They're very dynamic. But a couple of things that pop to mind that I've experienced when it comes to these sort of things is, practically speaking, the retirement fund that you'd have access to needs to be quite large, right? Because it has to serve, as proper security. So if you're looking at buying a property in full and it's worth R1,000,000, and you've only got a pension fund of 500,000 Rand, you can see how that's not really going to play out well. And if I understand correctly, there's certain percentages. So it's not that it's a certain percentage of the fund that you have that's used up as security. So not usually the full 100%. So if you'd want to buy R1,000,000 property, as an example, you'd probably need to have access to about 2 million Rand in your pension fund. So that's just something to bear in mind. Another thing to bear in mind, and this dawned on me because of my expertise in the tax space, if it so happens that you fall into default and the creditor has to now claim this amount from your pension fund, one also needs to consider the tax consequences of this, because this would more than likely comprise a early withdrawal from the pension fund. And as we all know, early withdrawals from pension funds and RAs are extremely expensive from a tax perspective. It's obviously to disincentivize people from trying to get the money out early. You want to keep it there for many, many years. So that's just something to bear in mind. And then something that also dawned on me as I was speaking now is there isn't much literature on how the new two-pot retirement system will tie into this. So a lot of the experience share was around the way that the retirement system worked up until recently, where a two-pot system has now been introduced. So that's also something to bear in mind. I think there is going to be conversations around the impacts, how the new system has actually impacted pension-backed loans.